A virus takes over the world and shakes the economy to its core. This is Bloomberg Wall Street Week. I'm David Westin. Welcome back. This week threw us all for a bit of a loop, including here on Wall Street Week. We missed last week as we made the transition from the world that was to the world that has become. Like most of the rest of us, we're now pretty much working from home or for some other remote location. We will look different in some ways, but our mission is the same: to bring you the best, most informed voices on what mattered this week. And for the duration, however long that may be, it looks like the only thing that matters is the coronavirus and what it's doing to our lives and what it's doing to our economy. We start this week on Wall Street itself. The New York Stock Exchange closed its trading floor because of the coronavirus, but kept trading nonetheless online. You know the results. The market posted its biggest one-day move up since 1933, but is still headed toward the worst month it's had since 2008. But whatever the ups and the downs, the question is, are the markets really working? How can they price future earnings when the companies themselves haven't a clue? That's where we started with Stacey Cunningham. She's CEO of the New York Stock Exchange.
Markets are always operating with some degree of uncertainty. It just happens to be higher than normal right now. It is important to recognize that they are functioning properly. So very, very different from, whether or not we like the prices or whether or not we even think the prices are reflective of where the economy is going. It's important to recognize the market doesn't actually reflect the strength of the economy. It reflects public sentiment about the strength of the economy. So it's reflecting how people are feeling, and that's why you're seeing these dramatic moves.
And clearly we're seeing a much wider band of possible outcomes in the market on any given day. We're seeing an enormous volatility right now. But is that market sentiment that you refer to, is that really a matter of what we think earnings are going to be, or whether we think these companies are actually going to make it or not?
I think it's a reflection of how people are feeling about those things. And so people aren't quite sure what the impact for their overall personal financial stability is going to be, what the impact of small to mid-sized businesses is going to be, and what the ripple effects that will have on the economy might look like. Like I said, the market's not pricing all of that in, but it's pricing in how investors are feeling about that. The situation is evolving so quickly. Every day we learn so much more. I mean, it certainly feels to me like each day feels like a week and each week feels like a month. And we are really very quickly evolving. The situation is so rapidly evolving that I do think people are reacting to new information by the minute.
There have been times when the markets have not functioned because of circuit breakers. It just shut down and said, let's not trade for a while so people can really cool their emotions. Have you considered at all the possibility of suspending the market for a longer period of time? Some big players on Wall Street have raised that possibility at various stages, saying, look, there's too much panic. Let's just take a hiatus for a few days.
Absolutely not. We are absolutely not considering doing that. And it's really important that we even stop the dialogue around it, in my opinion, because the fear that the markets might unexpectedly close is enough to put selling pressure on the close. And no one in a position of power to make that change is talking about that. No one is no one at the exchange level. The exchanges all feel the same way. The Treasury feels the same way. The SEC feels the same way. They've all made public statements about the markets needing to remain open. And there's a good reason for that. It's because investors need to have access to their money. And it can have an increased effect on panic in the market if you do shut down the market. The reason why we have market-wide circuit breakers is because they're a response. They are a well-calculated, well-studied, and implemented response that we took not during the time of stress, but in reaction to the 1987 crash, so that we would be ready for a scenario should it arise again. We don't regularly use them because we're not usually in that state, but we have used them 4 times in this month to date. And that's the mechanism that was agreed when you had time to think about it and have a rational approach. The decision was you can't close markets, but let's pause them so investors get 15 minutes to understand what's happening, to take a deep breath, to assess the situation and react appropriately. The circuit breakers have been functioning the way they're intended to function. Closing the markets would be the wrong thing. It's not going to change the underlying concerns, and that's putting pressure on the market in itself. It's not going to. It will have the likelihood of penting up more selling pressure during the market closure, and it denies people of access to their funds when they need it most. So certainly that's not being considered.
Stacey, are you happy with the circuit breakers and the way they've worked, or do you think it's going to be time, certainly once we get past this, which I hope is not too far in the future, when we should revisit some of them? They were imposed, as I recall, in 1987. Have you learned anything from the last couple of weeks that would say, you know, we should rethink some aspects of the circuit breakers?
Yes, and every time we have a market event, the industry comes together and we analyze it and go through the postmortem process of saying, hey, what did we learn and what do we think we can change so that we further enhance the resiliency of markets? 1987, that postmortem resulted in the market-wide circuit breakers. They've been changed since then. So when they were first introduced, they were introduced by the Brady Commission. They were based on the Dow Jones, not the broader S&P 500. They were based on points, not percentage moves. So they've evolved over time to be based now on the S&P 500 index, to be based on 7% move in the market. We absolutely will, after we get through this, take a step back and say, what did we learn and where can we further make changes? I do expect we might change some of the levels based on the fact that the futures for the S&P 500 index end up in a limit state at down 5%, which makes you lose some of that transparency when you know you're going to trigger a market-wide circuit breaker at 7%. In the meantime, we've been leveraging the S&P 500, the SPY ETF as a proxy for what that index would be doing if it had not been limited to a 5% move. And that's, that's, I think those are the types of things that we'll take a look at after these events and see if there's further room for improvement.
Stacey, you mentioned the U.S. government, the federal authorities down in Washington. What kind of communication is there back and forth between you and them on a daily basis? What are you hearing from them? What are you telling them?
Yeah, we've had an exceptional dialogue with our regulators, with the government at the city, state, and federal level. Everyone is very constructive, looking for ways that they can make short-term changes to be helpful. We've worked with the SEC on a number of fronts. They've been helpful for not just for the exchanges, but also for companies that are navigating this period of time and making some changes there. The government has been very focused just to make changes that are needed right away, right? And we've seen that with the stimulus package. We've seen with the actions the Fed has taken. And we certainly have had very constructive dialogue on making sure we can do everything to keep our markets as resilient as possible and maintain a certain level of investor confidence, even though the prices are startling.
This coronavirus has affected the New York Stock Exchange in a very direct way because you had on the trading floor, you had to shut down the trading floor for a period of time. Tell me where that stands right now.
We closed the trading floor on Monday. So many of your viewers may not be aware, but we operate 5 different exchanges, 5 different equity exchanges and 2 options exchanges. 3 of those total of 8, so both the New York Stock Exchange and both of our options exchanges have trading floors. So in New York, we have an equity and an options trading floor, and in San Francisco, we run an options trading floor. So those 3 markets out of the 8 have a combination of both people and technology. Given the nature of the outbreak and given the nature of the spread, and certainly its impact on New York City in particular, we made the decision to close all 3 of the trading floors. That means that we continue to trade electronically on those markets themselves. So it's not disruptive to markets, but you lose that human element.
That was Stacey Cunningham of the New York Stock Exchange. Coming up, we're pretty much all working from home now. We talk with the man who's making that possible, Chuck Robbins of Cisco.
Just to put it in perspective, in the United States, during any 1-hour period, we will do 100 million meeting minutes in just 1 hour in the United States right now. So we've seen incredible demand.
This is Wall Street Week. This is Bloomberg Wall Street Week. I'm David Westin. Teleworking, it's become the buzzword of 2020, and Cisco Systems provides much of the critical backbone making it possible for millions of Americans. We talked with Cisco Chairman and CEO Chuck Robbins about what the pandemic has meant for the world of remote working.
We've seen unprecedented volumes. We are, to your point, critical infrastructure for working from home and the internet service providers that are servicing all of us who are trying to work from home. I'll give you some statistics. We launched both free cloud security offers and free WebEx offers. And in the first 24 hours of putting that offer out, we had 240,000 new users sign up. And this is a platform that, before this crisis was running 300 million users per month. We are now at, we're doing 4.5 million meetings a day. That doesn't even include one-on-ones that are occurring on the platform. We're at 12 billion meeting minutes through March so far. And just to put it in perspective, in the United States, during any 1 hour period, we will do 100 million meeting minutes in just 1 hour in the United States right now. So we've seen incredible demand. I'll tell you, our teams are tired, but when you're talking about a platform that is now trying to support 3 to 4 to 5 times the volume that it ever was built for 4 weeks ago, they've done yeoman's work, frankly, to be where we are.
So, Chuck, have you been able to identify any weaknesses in the system? Because no one was prepared for this sort of onslaught, none of us, anywhere, in any way, shape, or form. Have you noticed any weaknesses or any things that you can be improving? What are those weaknesses? What are you doing?
Well, primarily, David, it's just about capacity. And, we have tremendous relationships with the large service providers around the world, and they've been incredible partners for us. We had one of the major ones in the U.S. We needed capacity this week. I sent him a text at 6 o'clock at night, and by midnight they had done the work and increased the capacity. So it's just related to that, and there are minor things that will happen during the day. We need everybody to be patient as we're just seeing these volumes that these platforms weren't built for. I mean, I've joked with our team, I should have told you when we spec these technologies that you need to build them to have everyone in the world working from home. And clearly we didn't do that. But the team, I have to tell you, I am so proud of what our team has accomplished because they're working 7 by 24. We're trying to put more resources with them because I'm worried about them right now, actually.
What's your own experience with working from home as a practical matter? Is that giving you a different perspective on actually the product you produce? Well,
it's first of all, I think we all like working from home periodically. I think we all miss the office tremendously. But, for our employees, we've looked at this across 3 vectors, right? What are we doing for our employees? What are we doing for our customers? And what are we doing for our communities? And even from home, we're able to execute on all of that. So, we have all of our employees are working from home. We've stated that we'll continue to pay our contract and hourly workers. We're doing a video meeting with all our employees every week right now, the entire company. And we have medical experts that are on. We have one later tonight where we'll do a Q&A, and we have 30,000 employees joining these Q&A sessions just so we can keep everybody up to date on what's happening in the world. And it's working fine for us right now. I think everybody's anxious to get back, but I think right now it's working great.
So as you say, you've got your hands full right now, just getting day to day. But is it too soon to start thinking about longer term implications for your business, for the business overall? I wonder if everybody who has learned to work from home will necessarily go back to the office once we're past this.
Well, I think that the capacity and the ability to work from home will continue. And I think what this is helping people understand is that it's possible and you can be productive from home. So I do think that this will change how we think about it in the future. But it's too early for us to really understand. And I told our leadership team, we had a leadership all hands yesterday, and I told them, look, we're not going to understand any structural changes to our business until we get to the other side of this. So I'll tell you, David, the big thing that we're really worried about beyond our customers, beyond our employees, are our communities. And it's great to see the package being passed in Washington today, but we've been trying to spearhead. You think about what's happening with our homeless communities, with those who are, one financial crisis away from being on the streets. I mean, these are the people we have to focus on right now. And we've been working very hard in Silicon Valley with our public counterparts to actually try to make sure we're taking care of them as well.
That was Chuck Robbins, CEO of Cisco. Coming up on Wall Street Week, the world waited for a monumental stimulus package from Washington, and at the end of the week, it got it. We talked with the woman most responsible, Speaker of the House, Nancy Pelosi.
All of these things are being done in a bipartisan way.
This is Wall Street Week. This is Bloomberg Wall Street Week. I'm David Westin. This was the week when Congress passed a spending package that would have been unimaginable just a month ago. Over $2 trillion to cushion some of the blow to workers and companies from bringing an economy to a screeching halt, or at least to slow it down. We talked with the Speaker of the House, Nancy Pelosi, on the eve of the historic House vote.
We're very proud of the legislation. We'll have a strong bipartisan vote, and hopefully by noon we'll be finished. That will only depend on how carefully we have to come in small numbers to the floor of the House to vote. But our debate will be finished, and we're very proud of it. We're very proud of the legislation because we believe that many elements of the House Democratic bill were contained in the Senate bill. It helped support the Senate Democrats who really, we did jujitsu on the Republican bill. It was very corporate-oriented. This is worker-focused. And so we're very pleased with that.
And Madam Speaker,
just to change the leverage.
As you know, Madam Speaker, there was a lot of impatience to get this done. When we thought we had it, we didn't have it. But it was held up for some of those issues that you're talking about that makes you prouder than you otherwise would have been. What's the most number one thing or two things that really you think improved because of the delay of a couple of days?
Well, let me just say it wasn't held up and it wasn't a delay. We saw a $2 trillion bill last Saturday. This is the legislative process. We have to see what it is and see how we can weigh in to get a compromise that works for the American people. So we actually should have been doing this over a much longer period of time where we'd have more transparency and the public could be more aware of the provisions in the bill. So this was a very accelerated pace as it was. But what we needed to do was to change it from corporate trickle down to worker bubble up. And in that way, it said that we do recognize that certain industries are going to need federal funds, and we want those industries to know that there are conditions to make sure that workers are protected, that they stay employed, that they're on the payroll, and that their rights are protected. It's very important. Strong infusion of funds for small business. We're very excited about that, and that is for the first time some grants in small business administration, and that process facilitated greatly to aid small businesses, which are, as you know, the lifeblood of our economy, the job creators, the wealth creators, so very, very important. So again, many of these changes that changed it from trickle down to bubble up took a matter of 48 or so hours. But that would not be called a delay. That would be called an improvement.
Fair enough. Let's talk about small businesses for a moment, because as you say, they really employ a lot of the people in the country. We've seen a lot of layoffs already at things like restaurants and things. How confident are you that that money can get to those small businesses? Larger businesses have more capital. They can tide it over and keep people on payroll. Smaller ones can't. Small Business Administration, are they up to that task?
Well, I just actually this morning spoke with the Secretary of the Treasury, Mr. Mnuchin, and we have been talking about this for a while, that we cannot leave it up to the process of the SBA. There's an initiative that he put forward that the banks could do the direct lending with the imprimatur of the SBA, and that would make this all go very much faster. And that will be a vast improvement, really necessary because of the urgency of getting those funds into the hands of the small businesses. And actually, there's also a loan forgiveness in there in terms of rent and utilities and the rest, depending on how a business thrives with the resources that they receive in a loan.
You mentioned also the oversight that's now in this bill, as I understand it, for some of the disbursements to the larger corporations. Some might call it a bailout. Is that oversight after the fact, or will it be advanced consultation so they'll be able to say, no, it shouldn't be going to that company, or do you have to wait for it to go out and then afterwards remonstrate with them?
Well, there are a couple different categories. For example, the airline industry has a very direct formula that part of the money, nearly 50-50, but part of the money goes in loans to the airlines, and part of it goes in grants because that goes directly to the employees, and that is the condition there. This money just touches base there, but goes directly to the employees to keep them employed. And then the other funds do have their conditions about no buybacks, no dividends, no bonuses, all of that kind of provisions, because people felt very burned about what happened in 2008, 2009. But it is, in terms of the bigger pot, which is at largely the discretion of the administration, we insisted that there be a oversight on that, and that was in our House bill and in the Senate bill. And it said that for the funds that would be released in that process, that there would be an inspector general to have oversight over that process, and in addition to that, a 5-person panel of that Congress appoints to oversee how that money goes out as well. This is absolutely essential. It could not be, for example, with all due respect to the secretary, he could put out money, we wouldn't even know about it until 6 months later, who may have gotten it, whether it was appropriate in terms of the priority it should have at this time where the lives and livelihood of the American people are at stake. There are different regional points of view about that, and just the role of government points of view. But we want again, we don't want to keep any resources from anybody who really needs it in order to, again, help our economy grow at this time. But it really has to be coronavirus specific. That has been our condition from day one. This is our third bill. Our first bill was about emergency. Our second bill was about emergency. Our third bill, which is this bill, is about mitigation, trying to mitigate for the damage that is being done to our economy, as well as continue to meet the emergency health needs of the American people. Our next bills will lean toward recovery, how we can create good-paying jobs as we go forward, perhaps building the infrastructure of America. All of these things are being done in a bipartisan way, but we do have to weigh in to make sure the leverage is more equal rather than favoring trickle down rather than bubble up from the workers.
Let's talk about that next bill that you referred to, whenever it may come. What sorts of things are you looking at? For example, I've talked to some people on the Hill who say this is a time for infrastructure. That may be part of the recovery that you referred to. Are you starting to think about what sorts of things would help with that recovery?
Well, we still have a little bit of unfinished business from the 2 previous bills. For example, in the first bill, we said testing, 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 free testing for everyone, and then next bill, masks, masks, masks to facilitate that. However, what we want to do, and has not been provided for yet in the 2 bills, is to make sure that the funds that are required to cover the cost of testing. It's not just the test, it's the doctor visit and the rest, and we don't want anyone to be getting a high deductible because they were responsible in responding to the requirement that they be tested for those who are required to be tested. In addition to that, family medical leave is not as inclusive as it needs to be to cover the needs of America's working families. In terms of what we do want to see more direct payments, we had much higher direct payments in both our House bill, and we would hope to see that we can do that again because that is really very necessary. Another thing, there's just some other things that relate to pensions. We had a pension provision in the bill that President Trump supported, but Senator McConnell wouldn't do and said we'll do it in the next bill because the pension security of America's working families is essential to the strength of our economy, and now with this siege of the coronavirus, even more so. Then there's one that is very particular to the District of Columbia. For some reason, the Republicans in the Senate decided that they would not treat the district as a state, as has always been in the distribution of resources, but treat them as a territory. And it is at the great disadvantage of the District of Columbia and a cause of great concern for the members of Congress, House, and Senate from this region, to name a few.
That was Speaker of the House Nancy Pelosi. Coming up, we need our healthcare teams around the country healthy as they work around the clock to treat the exploding number of COVID-19 cases. We talk with Mike Roman, CEO of 3M, whose company is on the spot for producing critical N95 masks as supplies run out. That's next on Wall Street Week. Welcome back from New York. This is Bloomberg Wall Street Week. I'm David Westin. All of us, financial titans, business executives, government officials, and moms and dads, spent time this week learning about how you fight a pandemic, about social distancing, about washing our hands constantly, about disinfectants, and all of it was for a single purpose: to avoid overwhelming a healthcare system that is already stretched to the breaking point. But if our doctors and our nurses are to do the job we need them to do, we need the personal protective equipment that keeps them from getting the virus themselves. And 3M is the company we need to manufacture that protective equipment. We talked with Mike Roman, Chairman and CEO of 3M, about the company's capacity to do just that and what can be done to ramp up and quickly.
That N95 respirator is at the center of what we are focused on. Our priority starts with the safety of our people, but the safety of the public is critical. And we have a unique responsibility to deliver those N95 respirators to the healthcare workers on the front lines. And we accelerated to maximum production globally, including in the U.S., beginning back in January, and we are currently operating at that level. We produce 35 million of the N95 respirators each month out of our manufacturing facilities in the U.S. We have prioritized those respirators for the healthcare workers on the front line. We can continue to add to that capacity. We're at 35 million today, and really delivering to the greatest needs around the U.S.
We're all becoming familiar with these numbers now. We hear from the president, from the vice president. Give us a sense, if you need to increase production, because it sounds like right now we can't get enough of these things, how long does it take for you to increase above that 35 million range?
Well, we're working with government partners, with other companies, looking at all ways to increase our capacity. We have made investments. Our strategy has been to keep idle capacity available for times like this. We've brought all that online. We are adding to that with additional investments that we had in the pipeline, and then we are working to continue to add capacity further out as we go through the year. So it's kind of in stages. Near term, we can add some incremental capacity. We're working with other companies to look at alternatives to add even more to that. So we are striving to add more each month, and then as we get out later in the year, we think we can increase significantly with additional production lines that will come online for us.
Mike, give us a sense of the relationship with the government here, because we have heard about 3M more than once from the president, from the vice president. As I understand, Vice President Pence actually went out and visited you at one point. Is this a matter of cooperation, support? Are they invoking the Defense Production Act with respect to 3M?
Well, we've been working very closely with the government. We've been working with Vice President Pence from his visit, looking at how to make sure that we can shift what have been the industrial N95 respirators into healthcare. So it was really appreciate the emergency use authorization out of the FDA, and then the PrEP Act amendment, which enabled us to be able to deliver our industrial respirators, that N95, to the healthcare workers of the front line. That was the first big step, and so we worked together on that. The Defense Production Act really has enabled us to work together on making sure we are getting the respirators to the most critical needs around the country. And our teams are working together with FEMA, with Health and Human Services, making sure that we are delivering where the needs are greatest. So it's a partnership that really has been very effective as we've come through the month of March.
Mike, you're right at the very center of a true national, global crisis, in fact. What in your past experience may have prepared you for this, or prepared 3M for this sort of unprecedented demand, not just demand, but need for the safety and health of the American public?
Yeah, we learned, I would say, coming out of SARS and H1N1, that we, as a leader in providing these personal protective equipment solutions, and really the respirators being critical center of that we needed to be able to lead in times of crisis. And so we made the decision to invest in capacity that stayed idle under normal circumstances. Normally, a majority of our respirators, that N95, goes to industrial use, protecting workers in difficult environments. In times like this, we have to both surge our capacity, and we've almost doubled our output since the beginning of the year, as we came into the year expecting normal business demand. And then we are able to surge everywhere around the world. We manufacture in all regions of the world. So the U.S. was very important, and we ramped that up to the 35 million, but we ramped up globally to over 100 million per month. So we are surging everywhere around the world.
Moving beyond the N95, there's something that I'm learning about called the Powered Air Purifying Respirator, which is the PAPR. There was an announcement that 3M made together with GE and with Ford in the UAW today. Explain to us what those devices are and what the nature of this joint venture is.
Yeah, I think this is a great example of how companies have stepped up. They've responded to the call to action to do everything they can to help serve the public safety and the needs of the healthcare workers. This is a great example. Ford reached out to us to work together on anything that we could do to increase our capacity and the solutions we can bring to the market. And this powered air purifier is an area that it's an important product for use in some of the healthcare environments. And Ford can bring expertise. They can bring skills where it's needed most for us and help us increase our production of those powered air purifiers. So I'm really pleased with Ford's response and the help they've been giving us.
That was Mike Roman, Chairman and CEO of 3M. Coming up, we can talk about business and the economy all we want, but in the end, the coronavirus gets a vote. We talk with Kathleen Neuzil. She's director of the Center for Vaccine Development at the University of Maryland about the science and the medicine of the crisis that we face.
We have to be working on medical, pharmaceutical measures, drugs, vaccines that can stem this pandemic.
This is Wall Street Week. This is Bloomberg Wall Street Week. I'm David Westin. It's been a week of economic and financial pain, and it's all because of a virus that we don't fully understand. So we turn to someone who's devoted her life to understanding infectious diseases and developing vaccines to combat them. Dr. Kathleen Neuzil is Director of Vaccine Development at the University of Maryland School of Medicine. She also serves in the advisory group on immunization at the World Health Organization. And we started with what we really know about this coronavirus.
This virus has only been known to us for less than 4 months. So it's really unprecedented how much we have learned about this virus in such a short period of time. We know it's a coronavirus. We know it's related to viruses that cause the common cold. It's also related to the virus SARS, which caused much more severe disease in an outbreak a little more than 15 years ago.
So if in fact SARS caused more severe diseases, why are we having a pandemic of this level? Is it because it's more contagious?
Yes, this virus, again, we continue to learn every day, but this virus does appear to be more contagious than SARS or MERS, which is the Middle Eastern Respiratory Syndrome virus. Neither of those appear to be as transmissible as this virus. So it's both transmissible and also has the ability to cause severe disease.
You're an expert on vaccines. We hear a lot about vaccines and we always get our hopes up, but at the same time we're told it'll be some good long time, 18 months or more. What is your estimate about the development of a vaccine for this coronavirus?
Well, I will say that the current vaccine in clinical trials, which you just mentioned on your program, the mRNA vaccine that's being tested in partnership with Moderna, NIH, and other collaborators, went into clinical trials in an unprecedented amount of time. Within 2 months of having the sequence to this virus, we had built a vaccine and we're testing it in humans. That took a lot of collaboration by many partners, including the FDA, and all partners are committed to continue to have these unprecedented timelines. So we're really hoping we can shorten both with this vaccine and other vaccines that we'll see entering trials very soon, that we can shorten those traditional timelines.
Even if we shorten them, though, as a practical matter, is that for the next round if it comes?
It would be for the next round when it comes, but again, we know because of the economy, because of human health, social mitigation, these community measures will only go so far. So in parallel, we have to be working on medical, pharmaceutical measures, drugs, vaccines that can stem this pandemic.
Short of a vaccine, talk about treatment. We've heard from the President of the United States and others about 2 drugs out there currently, one dealing with malaria, one dealing with Ebola, that I guess have at least some promise. What do you think the prospects are for getting those in position to really affect treatment for people who have the disease?
Well, the good news is the trials are underway right now. And because there are so many cases, again, we will likely get answers for those drugs faster than we ordinarily would. So I would expect and hope that within a couple months, we would have answers on the drugs as well.
As you consider either a vaccine or a plan of treatment, How critical is it that we have testing, either the population more broadly or of people, for example, who have had the disease?
Yeah, as you've heard, testing is absolutely critical. It's absolutely critical for many reasons. It's critical to inform our medical care, our treatment, our enrollment of these patients into these critical clinical trials. It will be important for our testing of vaccines and our ability to see how vaccines work in the face of antibody or lack of antibody. And obviously, it helps us keep people at home when we know that they have the virus and have been infected.
As best you can determine, what sort of level of testing do we need to have? I mean, is it hundreds of thousands of people? Is it millions of people? What do we really need to do to really get our arms around this from a public health point of view?
Yeah, right now, I think, again, it's a very local decision. We certainly need enough tests for anyone who's sick, anyone who's been exposed to people who are sick, and of course, our healthcare workers. And here is one thing that people don't always consider about testing. If I'm tested today and I'm negative, it doesn't mean that I won't contract the virus next week or the week after. So for healthcare workers that are constantly exposed to this virus or others that may be in positions where they are exposed to this virus, we may need to do frequent testing on those populations. So multiple tests per person may be necessary.
So that sounds daunting, I must say. Are you confident that we as a country, and frankly our government, is mobilizing enough forces to get that kind of testing in a position to happen?
I think we can get there. You know, again, this has been a very short timeline for this pandemic. And we're seeing communities in Seattle, they've ramped up their testing, for example, in an incredible fashion. So we know it can be done. It's going to take collaboration. It's going to take the private sector working with the public sector. But in the same way that we had this vaccine being tested in an unprecedented time period, we can do the same thing with testing.
That was Dr. Kathleen Neuzil of the University of Maryland. Coming up on Wall Street Week, we turn to our special contributor, Larry Summers, to wrap up the week and give us his thoughts on next week. This is Wall Street Week. Welcome back to Bloomberg Wall Street Week. I'm David Westin. Well, it's been quite a week on Wall Street, quite a week for the United States, and quite a week for the world. You've heard from some of this week's most important and influential voices. Now it's time to get some thoughts from our special Wall Street Week contributor. He's Larry Summers, former Secretary of the Treasury. Larry, thank you for joining us. I can't think of anyone I'd rather hear from as the week concludes here. Let me start out with a little exchange this week. We heard from Lloyd Blankfein, former head of Goldman Sachs, on a very important issue that was being debated through the week, which is how fast should we start letting up on some of these restrictions because the economy is being crushed. And Lloyd said, look, okay, it's fine to do it for a little time, but crushing the economy is also a health issue. And he said within a very few weeks, let those with a lower risk to the disease return to work. You had a response to Mr. Blankfein.
You know, David, Lloyd doesn't think that infectious disease doctors know much about trading derivatives and fixed income securities. And I have to say, I don't think he knows much about infectious disease. The problem with letting the healthy people go is that the healthy people can still carry the disease and affect those in our population who are most vulnerable. So that's a kind of social Darwin suggestion that I don't think is worthy of my friend Lloyd. And it's not worthy of the President of the United States when he talks about ending all this after 15 days or ending it at Easter. The truth is, it's not the measures that are hurting the economy, it's the virus. We could have waited another week or two, but when there were corpses in the street, no one would have been going shopping anyway, or going to sports events, movie theaters, or restaurants. So it's not the measures that are hurting the economy. And the single worst thing we could do for the economy would be to reopen everything prematurely, have the disease spread everywhere like it was in Italy a week or two ago, and then have to back right back off. So the truth is that doing the soundest things we can do for public health, which are social isolation measures for a meaningful interval, and then moving to a regime with testing and contact tracing and responsible gradual opening, that's the right public health strategy, and that's the right economic strategy. And the idea that there's some conflict between saving the lives of our seniors, protecting the most vulnerable in our society, and continuing to be prosperous is actually a deeply repugnant one, whether it comes from President Trump or from the former CEO of Goldman Sachs.
And Larry, who should decide? We have the President of the United States, as you suggested, making some statements about maybe getting back by Easter or so, at least in large parts of the country. We have individual mayors and governors making decisions. Should this vary? Do we trust it to vary state by state, even locale by locale?
There should be some national overall guidance, but conditions differ in different localities, so there should be scope for local decision making as well. But there should be a framework that is set federally, just like there should be a federal approach to making sure that we have enough tests and enough protective masks and enough ventilators. We're one country, and there are things the federal government has to do, but it has to do them rationally and thoughtfully rather than based on the prejudices of an East Hampton barbecue party.
Let's talk about one of the biggest developments, perhaps, of the week, and that is this $2 trillion spending package that came out. Actually, it was just approved today on Friday at the very end of the week. Is it enough? You heard Nancy Pelosi address it, say she's very proud of it. It's going to be not a recovery. She had made that distinction. This is more really trying to mitigate what's going on, or maybe even saving the economy.
Nancy Pelosi should be proud of what she's accomplished. Chuck Schumer should be proud of what he accomplished. Joe Biden, who 10 days ago laid out many of the elements that came to be included in this plan, should be proud of what he's accomplished. And the Republican leaders who worked on this overall, they should be proud. This is an important, massive package with the right basic orientation towards helping people, and I think people should be proud. But even as they're proud, they need to recognize two crucial things, David. First, they need to recognize that ultimately this is a public health issue. You can make the interest rate negative 10%. You can have a budget deficit of $10 trillion. But you know what? If people can't go shopping and they can't go to work, you're not going to have a healthy economy. And so we can't have a healthy economy before we have a healthy population. And that depends on biology, and that depends on public health measures and having a sensible, aggressive strategy. The other thing they need to recognize is that this bill moved us, as Nancy said on your show, from emergency to mitigation, but mitigation is still short of recovery. And we're going to have a lot of work to do as a country to move ourselves forward, to get the economy back fully employed, and to do what we weren't really doing in a sustainable way before, which is to maintain reasonable economic growth at a rate where middle-class families' incomes can grow. And we're going to have to move to that. So, yes, people really should be proud of this bill, but they shouldn't think it's the end. I mean, think about just one issue that's still out there. Every state, almost every city in this country has a balanced budget amendment. Their revenues are going to collapse because of the recession that's going to come because people can't go to work. And yet, they're going to have a whole set of costs to deal with all the medical consequences of this for their municipal hospitals, to deal with all the educational consequences of kids having to take months out of school. And so you've got a huge mismatch. This is not the time for them to be slashing spending, and yet they can't borrow. This is a time for the federal government to use the best credit in the world, and that's what the United States has, to use that credit to borrow and to help state and local governments work their way through this. There's some money directed at that in this bill, but not nearly enough. And that's something Congress is going to have to come back to.
Larry, take a step back with us for a moment. What happened to American exceptionalism? That's been much debated in the public sphere for years now. We think of ourselves as an exceptional nation in various ways. We don't look very exceptional right at the moment.
David, it's a great issue that you raise. We do look exceptional. We've got the highest coronavirus rate in the world, and it's very possible that when this is all over, more Americans will have died than citizens of every other country. But you know, what we all have to think about, it's not about Democrats or Republicans, people who believe in the federal government or people who believe in local governments. It's not even about government versus the private sector. Our ability to do things competently in the country, whether it's to have enough tests, to have enough masks, whether it's to provide healthy water to the kids in Flint so their IQs aren't reduced by lead, whether it's to take care of the levees in New Orleans so you don't have a fiasco like Katrina, whether it's once that fiasco of Katrina happens, you don't have stuff like Good Job Brownie as the recovery effort is being botched. Whether it's the fact that it takes a lot longer to get into New York City on the Long Island Railroad than it did 60 years ago, or a lot longer to fly from Boston to Washington than it did when I started flying that route frequently 40 years ago. Whether it's the fact that in many ways we haven't made the progress we wanted to make in educating our kids. We've made huge progress in many areas in our country, but core, simple competence in getting routine tasks performed efficiently and quickly, we seem to have lost that gene in America. And I think that that's in many ways the issue that's behind all the other difficult issues we face.
Yeah, it's hard to believe we put a man on the moon just 50 years ago when nobody thought it was possible. And now look at where we are. Thank you so much, Larry. That is Wall Street Week special contributor Larry Summers coming to us from Massachusetts. That does it for Wall Street Week this week. Next week is sure to hold a different set of challenges and puzzles and even opportunities. And for the time being, they all appear to be driven by this virus that we really don't understand fully. But however it all comes out, whatever happens, we'll be right here with Wall Street Week with some of the most important voices. That does it for this week. I'm David Westin, and this is Bloomberg Wall Street Week.